Mic check.
Morning.
Somebody sound like Ben. Good morning. Morning, Tariq. Morning. So where are all the persons who wanted to have a review? Where they at? Nobody's here. Okay. All right. I guess I'll start with sharing. Nah, that's too far. Not yet. Daily chart, I guess. Start with daily chart. So over the past couple of weeks, maybe 5-6 weeks, I have started something that I'm trying to use to highlight weekly profiles. And I don't remember which day I started. I think it was something in here. I'll tell you which day I started. I started on, there's a big spike. So here, I started this day. So since this day, I have been essentially, so I'll take everything else off the screen. I've been essentially trying to show at the end of every week or at the start of a new week, when you look back, where are the significant price points, significant turning points, and what was the weekly profile in the previous week. So I just tracked which day created the high of the week, which day created the low, open price, every week, week over week. So if you know me, or if we've spoken recently, you know I'm looking for what we're humorously calling the billionaire games or the millionaire games, which is essentially going to be a period where NASDAQ and crypto get about 50% discounted from where they are now. And then we play buy and hold strategies. So I have an account sitting patiently waiting. I'm going to be using very small sizes and just buying and holding over a 6 month to a year period, or until we get new highs. It's an experiment I want to try. If I blow the account, I blow the account, but whatever. So I've been looking for that for some time now, and it hasn't happened. And then yesterday, this happened. So I am optimistic that this is the start of the decline in both Bitcoin and I think crypto markets that will take them all the way down to discount territories and buy and hold week over week. Anyway, so with that being said, tracking these week over week, let me try to show you. TradingView says the image is too large. I can't post the picture on the chart. Okay, so I guess I will have to find another way to show you. Give me a second. Here. There. So this is the image, or the last one I shared. Not the last, the one before. Each of these boxes represent a week, Monday to Friday. I've taken off the lines to make it less crowded. So you can see this is the week that just ended. I have current weekly open, previous weekly high, previous weekly low, and the day that made it. I think the rest is hidden behind this candle. And then the downside objective for the sell-off. This is objective number 1. So if you're up to date with your charts, you know that we are all the way down here, sitting right on top of that box. So when I get a chance to update this chart, I'm gonna have a pink colored box around last week's data. I'll move the lines, current weekly high, current weekly low, or previous weekly high, previous weekly low, and then at the open tomorrow, it's rinse and repeat again. Okay. So why are we starting with that long-winded blah 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 blah? The point of doing that is to highlight that since the start of air quotes the delivery, or when I started the study, we can see inside every single week here, based on what they created, a high or the low, we can see where liquidity pools are resting. So that if we start with this, we can see that Monday, Tuesday low of the week, which means Wednesday, Thursday holding liquidity, Friday holding liquidity. Next week we have Monday low, Friday high. The anomaly, classic trending market environment setup. Monday low, Friday high. No daily low taken until here. So then rebalance or retracement. Then we push again. This low is way more significant than everything down here, because this is essentially the start of the new push. If we can violate this to the downside, then chances are all of these trendline liquidity from here to here comes on the menu. So start week, high, push, retracement, low to high, weekly FEG type of vibes. Most persons would look at maybe something else, but weekly FEG kind of vibes is what I'm looking at here. So you can see reaccumulation, and they made a new high, and then this week started no close above the old weekly high until this happens, and then crash. So in a perfect world, if everything is behaving, I would love to treat this Wednesday candle as a bearish order block and play retracements into here to go lower. That's what I thought would have happened yesterday. I didn't think we'd crash off here. Now that it's happened, I am forced to accept that imbalances are in there. But the most important thing is to look for, when we open, do we get below this? And if we get below that, do we just grab liquidity and come back above it? Or do we grab liquidity and make an attempt to get below here? Because if that happens, then I'm thinking 16,000 for the stock market progressively, and then the buy and hold millionaire games. So for a review, as far as planning for the week goes, I can't make any decisions until Tuesday because Monday is a bank holiday. So I'm not going to try to impose my will or anything on that. Tuesday, when the markets resume, I want to see what's going on. So for a review, what we can do is take a look at the delivery Monday to Friday in relation to previous weekly high, previous weekly low, maybe an hourly chart, what setups we could have participated in, and pretty sure most persons are already short on Friday. So we don't need to review that Friday short, but I guess I'll be open to questions afterwards. So without further ado, let's get back to the chart. So we have Monday here. So keeping it light. Previous weekly low and previous weekly high. So this would be the areas that you'd be looking at or factoring as this week starts. I'm gonna slap a line on there for the weekly open. And then for review purposes, I'll drop to our hourly chart and then we can take a look at what information could have, would have, should have been important. I did not look at the hourly chart last week. Just pretty much scalping. I guess I could kind of debut some stuff on this call too, but we'll see. These are the areas to pay attention to. Typically, I would look at an impulse, look at where we close in relation to that impulse, and then at the start of the new delivery, I'd factor in an element of retracement. So something like from this high to the retracements that happen here, focusing on the bodies, and use this as an area of fair value. This is typically what I like to do when I'm trading. So if this had not gotten down into all of this big imbalance right here, coming into the week, that would be ideally where I want to participate for continuation longs. With the shutdown talks, I cannot, and I've said it before, I cannot justify why these markets keep making higher high week over week. It doesn't make sense. If an economy is going to shut down, the first thing that gets impacted is consumer spending. Everybody's locked in, nobody's going out. People are going to be spending less. Spending is not going to stop, but people are going to be spending less. As people spend less, it's going to impact company earnings. There's some sectors that will thrive, right? Because when people are home, they will do stuff more, and then those sectors will essentially not be losing out. But most part is once spending stops, company earnings get impacted. And if company earnings are getting impacted, then the index that measures company the index that measures company earnings must drop as well. So if you've been following me week over week, you've been hearing me every single day looking for shorts. Bullish probably like 10% of the time in the last 4 weeks. And escaping, taking losses, getting some shorts. Yeah. No, we see this. Most times when you see this, you automatically want to start thinking about retracement and shorts. I don't know. I don't know. So going back to the analysis, if we had this and imbalance is here and we retrace the imbalance, I'm less interested in using this imbalance as a key level anymore. And it's because when you have a key level, the delivery at the key level is supposed to tell you what you want. And if we reject the FEG, we trade up and we make a new high, then that's classic 1, 2, 3 push, like up, down, higher high. So higher high. This happening off the open of the week it's a nice thing to see in terms of understanding and practice, because classic fair value says above the open of any delivery is fair value for selling, and below the open of any delivery is fair value for buying. So seeing them run the high, then drop to the open, I guess reaccumulate, and then higher high, there's nothing wrong with that in my opinion. When we get here, the same thing that I did here in this push would be what I want to do here. Push higher, find the inefficiencies above the old high, and then look for retracement there. So in that case, it would be this high, we push above it and find a retracement there. That would have been the first one. Then it comes down, then it There we go. I was about to say that the trading gods don't like you guys at all. At all. Can't have a trading conversation without interruptions. Nonetheless, resuming the conversation, right? FEG comes down. This is holding higher prices. FEG comes down. This is breaking. I get less interested in buys unless this guy here acts as an order block. Well, to be honest, not this guy. It would have been this one. Wait, no, it would have been none of those. It would have been the one that closes below here, and then that would have been this. So this is the candle that closes below the FEG. There. So above this was what would be what makes me want to go long. Time of day would keep me out of this trade. So this would have been Thursday. So coming into the day on Friday, using this analysis, I'm not saying this is what I was trading, using this analysis, that would have been the level I want to see get held before I look at higher prices. Now, without this analysis, the fact that we weren't closing on a daily basis above the weekly high had me thinking that we're likely to get a sell-off. So you would have seen on the Patreon post, I mentioned that TGIF for the question sign, because when a week opens and it starts to push and it does not look convincing, 8 times out of 10, I guess we get a big TGIF sell-off, which is what we got. So that's what I was looking for. So I was selling yesterday. So let's go into a lower time frame. Play around with what was happening here in terms of trade ideas, and then take some questions, and we see where the day goes from there. Hourly chart, I'll cater to the needs of others and use a 50-minute chart. Not that I use a 50-minute chart, doesn't matter. There we go. We would have had open price, candles without wicks, or candles with like naked lower off candles that don't have big wicks at the bottom or wicks at the bottom. We always want to see those get tagged. CSD, time of day here, 11 a.m. I guess normal for longs. And what I'm saying normal is I have adopted this idea where most of the morning session before 10 a.m. is like a session, and 10 a.m. onwards, or 10 a.m. to like noon, is typically where you get retracements or reversals, and then noon to 2 p.m. it kind of dies down, and then after 2 p.m. you see the effects of settlement start to kick in. And I know that if I say settlement, everybody's going to want to know what is settlement time, blah blah blah. CME says settlement time is 3:15 p.m. Amen. Moving on. There we go. So I try to end my day around about 2 p.m. unless something significant is convincing me not to. I don't have an example of what is something significant, but yeah, there we go. The next ideal way to look at this in terms of making it useful would have been to go to like a lower time frame. M15 is not ideal for me, and then try to justify liquidity run. There's no order block. So where are you going long? Not going long. Same thing again, over and over and over. I guess this would have been a buy based on that logic, and then targeting all daily high and then a crash. It's enough of a M15 for me. Now going into the 5-minute chart, I personally don't like looking at a chart that is below M15. Let's put it like that. and we are framing trade ideas and we don't use time. I personally don't like that because it it creates this this thing that you feel like because you're back testing and the candlestick says this is an entry and it moved away from that entry, that would have been a trade that you would participate in. And then that bad habit kind of spirals out where you no longer focus on only executing within a certain time window. It's like whatever time I'm at the chart is when I'm going to trade. So you wake up at 2 a.m. like, oh, look, it's 2 a.m. Reach for your phone, turn on the PC, whichever you do, and you just start trading. Market's not moving the way you want, or it stops you out and then it runs, and then you start saying, oh my God, blah, blah, blah. So to avoid all of that, I only look at price action within a window of time, and that keeps me away from form fitting logic or form fitting entries. No, because I'm going to say that, what I'm going to do next is very likely going to rub a lot of persons different ways. Okay? So, to preface what I'm going to do next, I'm going to make a statement that we've all heard before. Processes predict, rules protect. I've already talked about processes and how just focusing on a delivery or a fractal can help you anticipate what comes next. And I know you have a good idea of what it means when we say rules protect, because it means if historically you've seen that Asian session is almost never greater than 20 or 30 points, but you like 50-point trades and you trade in Asia, chances are you may not get that 50 points. So if you've developed a strategy or a game plan around 50 points, and you notice that certain times of the day does not provide the volume or liquidity to make that trade possible, it means you have to use your own rules to customize what trading sessions you pay attention to. For me, trading at the open of the day is rubbish. And we know why. If you trade live funds and not prop, you will notice that your margin requirements changes as it's within the first hour of the day, 5 p.m. to 6 p.m. then. And then after 6 p.m., the margin requirements go back to normal, and then the market starts looking better. Likewise, after 3 p.m., if you pay attention, you will see that liquidity and margin requirements tend to go wild. And that's usually because you have earnings or market on close or settlement, whatever. Something is always happening after 3 p.m. that says it's just crazy. So I took those rules upon myself and I customized both indicators and trade plans to simply keep me out of those times when I'm likely to be wrong. It does not mean this is secret information. It does not mean somebody is talking about this somewhere. It simply means from a consistent trading perspective, these are the things that increase the likelihood of you making money. So you've heard this before and you'll hear it again. 2 p.m., I end my days because it gets wild. I'm not trying to enter after 2 p.m. I just told you 6 p.m. is the same thing, which means 9 times out of 10, any type of trading I'm going to do is going to take place after, I'm not saying at 6 p.m., after 6 p.m. and before 2 p.m. There we go. So with that in mind, if we had the ability, let me take a couple of these Then I'll take this off. I'll take this off. If we had the ability to trade and we could simply focus on the open price at 6 p.m. Take that off. There. One sec, let me take off whatever other gap it's right in there. There we go. So this is for the folks who already can trade and you're not looking to change your strategy or anything like that. If we pay attention to trading like this and we look at the largest orders very likely being executed after 6 p.m., it does not mean trading is not taking place before. It does not mean orders are not submitted before. That's not what it means. It means that if you pay attention to the submitted orders being filled after 6 p.m., you get a lot more out of price action in terms of refining where, like precisely where you want to see something happens. Okay, there we go. So we'll go through since Sunday, and every day we'll take a look at what the markets look like between this time window here. Okay, if we have this as the start of the matching of the orders are submitted, yes, and then they come in and then we start doubling them up here, and we look to trade inside this box to 2 p.m. from here to 2 p.m. you'll find that a lot of the things that you want from price action generally plays out. Even if you don't get majestic sell-offs or great rallies, focusing on trading in here just works out better. And then the best part is it doesn't matter what time frame you're using. You could use a 1 minute chart. This is a 5 minute chart. You could use a 4 minute chart. You could use a 2 minute chart. You could use whatever chart. What matters is knowing what the key levels are based on time, knowing what to look for at these key levels, and then just let the rest happen. Amen. So here was Monday. Would have gotten into the charts. Again, just basic analysis. We're not doing anything crazy. Market is rejecting the open price, pushing higher, rejecting the open price, pushing higher. So we know every time we make a new high and it displaces, we look for imbalances. If the imbalances are there and they're being respected, chances are we're going to continue. That does not take any type of secret knowledge, or it's just how the markets are. So I'm not going to be super meticulous with this. I'm going to give you something to do. We start at first high, look for close above, imbalance. This imbalance is broken. If we close above this down candles open price at 11 p.m., look for longs. If we close at 11:10, you're buying 11:15. Amen. There's a scalp. This is Asia or close to midnight. You're not trying to get 50 points. This trade would have given you from 81 to 902 or 901. So call it 20 points. There it is. And that's it. Your retraces after, you got stopped out or whatever. You couldn't care less because you know this is Asia. You know what it offers. Blah, blah, blah. For the midnight guys, this is just for humor. I don't care much about midnight. And this is not even midnight New York, as a matter of fact. So makes it even worse. But if you're looking at midnight Chicago time, then who knows? Maybe you'll see stuff. So just for the sake of being humorous, nothing more, I'm gonna put a line at midnight open price. Please don't read too deep into this. The new day starts. This is behind us. This is still London session inside here. Not a big fan of London session, but hey, look, London session trades down and sweeps that low. If midnight, regardless of the time of day, was so significant, why did I not get that sell-off right there? Oh, but Kish, it came back right there and then it did that and then it broke down. Okay. So this is more important than this? Not to me. This is way more important. So I'll be looking at trades here because midnight open price is rubbish. And that's Chicago time. Much better. Now this looks way more pronounced. Why? Open price rejection. Okay. I'm gonna go on a little bit of a spree. If you study a whole lot of delivery and delivery fractals, you will come across instances or setups where you put a box around a range and a line at open price, and you see a whole lot of respect or reaction taking place at the open price. In hindsight, it always looks beautiful, like, great, look at this, wonderful. When you have a rule for what you want at those prices, life becomes easier. What do I mean? If a market is expanding down and it comes back to an open price and it wicks but does not close and then closes lower, that's a continuation fractal. But Kish, isn't that the same as this? What happens if it fails? If this is a continuation fractal, like any other setup in the world, it has two key components: confirmation and invalidation. If we have down candles breaking lows, bearish order flow is invalidated at ... Bearish continuation is supported at ... So if you see something like this and you're bearish and you have this is what invalidates the setup, then it's pretty easy to say at any point in time, at this time, I'll stop looking for this direction because this happened. If this happens, I look for that direction. Amen. Simple. So if this is basic, open price is rejected, we didn't close above, you don't short. Open price right here, we get a up candle, we close lower, now you want to short. What are you targeting? Simple. This is not a close below that level. Okay. Buying pressure. What do you want to see here to support that idea? Down candles, especially the ones to the left, especially their failed expansions, being CSD and then look for longs. There we go. So then what happens in here? Same thing. Every time a delivery starts and you get a new high, frame the imbalances. Find a new high. Here. Close above it. Okay. I can see that the down candle came back right here immediately. So I don't want this imbalance because it's already filled. So inside here, in that push, look for the imbalance. That's it. Can I join the secret meeting? Oh, no, it's not a secret meeting. So imbalance, rebalance, new push. Inside here, there's clearly no down candles. So that's it. We know. Looking for down candles here. This is the first down candle body. That's your imbalance. Has to be important. Pull it out in time. It's being respected, right? We're sitting on top, going, and it rallies again. 720 comes in. Easiest trading system in the world. I'm gonna have to take off some of the lines to remind you what the easiest trading system in the world is. At 720, you mark current high of the day, current low of the day. This ran below the open, so this is the low of the day. Between here and here is your range. That's it. If you have a range, stop run to high. Everything you want to frame can be done right there using 3 lines. There, just 3 lines. Low of the day, high of the day, 7 a.m. open, 7:20 open. This trade makes itself. I don't have to explain this. I don't have to tell you that. Look at that. I don't have to tell you that here's a old high, here's the imbalance, here's price closing below an imbalance, one FEG up, one FEG down, BPR. I don't have to tell you that. You already know that. I don't have to tell you that there's confluence here. I don't have to tell you to look at the lower time frame. I don't have to tell you that this is a low before here. I don't have to tell you that this is 50%. This just makes sense to you. So I will not dissect that trade. Instead, I'll just shuffle over to the next day. There we go. Same thing at 7:20. Range high. Range low. Before I put this box on and take off this light, I'll just put it there so you know that this is 7:20 always. Since the start of the day, liquidity pool ran. That's a stop run. There we go. Easiest trading system. Oops, this should go over here. Easiest trading plan in the world. What am I going to do? I want to see it run that liquidity pool, CSD, and I short. What am I going to target? 7:20 open first or old high first, depending on how far up it goes. And we can see that this went high, so be realistic. If it's breaking the high, breaking the areas at the high, look for lows on the left of the high or left of 7:20 here. And then if we really get animated, this low. Simple. Looking for that CSD. CSD. Expansion. Short, right at that open price at 810. Stop at the high or 20 points. You know, your choice. That trade makes itself as well. Here we go. I don't have to talk about London. I don't have to talk about anything here because London didn't run the low. So I don't have to talk about London. If we want to look at anything, it's going to be new highs and the imbalances. New highs, the imbalances. New highs, the imbalances. Everything else is overkill. Unless you are adept to the point where you can factor in more things in your system and it does not change what you're doing because you can already see this much. So I'm not going to explain that trade either. Here's the next day. 7:20, same thing. Open, come down, makes low of the day, takes out, goes up, too many lines. I'm not going to tell you to look at reactions at old lines. If you want to factor previous daily highs and lows, that's up to you. You don't need me to tell you that. That's a good thing. So open price comes in somewhere around there. Right, take a look at this. Open, range low, high taken. Are there imbalance inside here? Right here. Closed. Looking for long setups. It's in Asia. It doesn't play or it doesn't give you 20 points. Normal. It breaks down. We break and close below the open price again. So if in bearish expansions, there's the open price of the cycle and we are rejecting it from below, what happens if we open, go below the range, close above the open price, and then we're trying to expand below with a close below the open price again? It's a change in your bias. Asian short, down to the low of the day. Don't think this is a sniper exit because spreads would have said no, and then your TP would have been left and it would have stopped you out. So what's more important? If I'm entering here at 877 and the range low is at 824, and I ideally want 50 points, but I'm not trading in New York where the volatility is high, can I settle for less than 50 points? Going once, going twice, sold, of course. 30, 40, 20, whatever. You don't need perfect exit here. You go up, price makes a new high. This is something that you should all know. When I say this, I mean this price swing from exactly right here to right here. Somebody's already saying it in their minds. I know what that is. And somebody's like, expansion? No. When you have a price swing that takes buy side liquidity and sell side liquidity, it is called ... Don't shout out the answer. You already know what it is. So if you have this range and the market retraces inside this range, we're in deep discount. What are you going to do when you get 720 open in deep discount and the market is putting a down candle and expanding above it, and the low already has a stop run? You look for longs and you look for higher prices. Or you at least look for this high to get taken. When this high gets taken, you make a decision. I'm not going to say in advance that I would be long here expecting that. No, I wouldn't. Depending on if I'm at the charts, I'd be looking for what happens when you get to that high. And because I have a bearish bias because of the shutdowns, I would be looking for shorts right here. I'd be looking for something, some type of CSD. Clearly, if I was looking at this time frame, there would be no CSD, so I would not be short, etc., etc., etc. Amen. But if I was looking at another time frame, and I think I was looking at M1 here, and I went short and I took some losses and I stopped and I walked away. Because I expect reversals at 2 times. Whatever time it runs buy side and 10 a.m. So if I'm not getting a short when buy side is being run or 10 a.m., there really isn't anything for me to do here. And over the years, I've become a lot more content in walking away from price action if those conditions are not met. So, in hindsight, beautiful long setup. We know why I was not looking at this perspective. There we go. Thursday. Same song and dance. High. Low. We can see how the market went higher, closed back below here, which makes this your CSB. Because if we are rejecting the open price from above and making new highs or CSD, that's bullish. If we're rejecting the open price from below and CSD, then that makes it bearish. Amen. Short. 720. Here. Now, I'm going to put this on to answer one of those age-old questions. There. Behave. 9 times out of 10. 9 times out of 10, everybody would frame the range like this. 9 times out of 10. But this is a run on buy side, and this is a run on sell side. So this is your range. Okay, what does that change? Nothing really, unless you pay attention. This is your retracement inside the range. Rejected the open price again. All the expansions that make new lows are going to start here. So in this push down, every significant PD array or whatever array is going to be there. If this low is broken and we close below it, it's not just wicked. If we close below it, you are always looking for FEGs right there. Because FEGs right there create breakaway gaps. So take that and you put it here, where's my breakaway gap? There is no FEG. This candle was there, but then it rebalanced it immediately. So what does that mean? It means I need to create the cousin of breakaway gaps. It's called a dark pool. So you find the first candle high that's below here. There. And you say to yourself, whatever side of these two lines I close, I will trade. It closes higher, you go long. It closes lower, you go short. Amen. Here's 720. We are above this. 720 open has been rejected from above. There's CSD. Let's say you look for a long here. Market rallies, fails to go anywhere. Roughly about 10, 20 points. Maybe your break even, it stops you. Equities open comes in somewhere inside here. Big wump closes right at the low, and then right after we close below. Right here, you're bearish. But you're not thinking the market is heavy because this did not close below here. So think about it for a second. If you're bearish, but you don't think the market is heavy, how do you participate? Answer is above the open prices of the following candles. Why? Because markets that are not heavy but bearish tend to retrace. Markets that are bearish but heavy tend to not retrace. This is not secret information or anything. This is just applying your understanding to create a plan. So when you get to the charts, the candlesticks don't drag you in 17 different directions. You have a plan. The plan is if this, then that. If this, then that. So right here, when we close at 835, I am looking for a pop-up to short. Now, depending on how you feel, this is a pop-up. This is way above the open, by the way. So that's a pop-up, and that's a pop-up too. Anywhere in here you went short with a 20-point stop, I believe you'd be fine. Unless you're trying to be super precise and you're looking at this FEG or have got no clean entry, doesn't matter. Once you open, you pop up, you should be fine. What are you targeting? There is no low here for you to target, but you're looking for the market to break away from here. So you have to look for confluences to participate in. Easiest confluence in the world is projections. Why? How? When? You take a swing that's dominant and you clone it, and you have your target. So you're looking to go long, you're looking to target here. Amen. But it went lower. Who cares? That's a short. That's about 100 points. Amen. What if you don't know anything about projections? Then you go over here. What are you looking for? Old highs, imbalances. There's one inside here. Expansion. We didn't retrace to the order block. Lies, we did. We expanded, we traced to the order block. So your imbalance is not going to be in here. It's going to be above here. So here, all the way up here, or to here, or to here. I'll use this one since that one didn't close above. All that are those are your. Don't want to create PD arrays here. This is not a suspension FEG either. No, too far. All right, never mind. That's the imbalance I'm going to target. So you pull that out in time.
It's a block, not a FEG.
Please don't kill me, okay? And there's your target. Now, I don't know about anybody. If I got short here and this is 100 points, I don't care about this target anymore. What I will care about is if 10 a.m. is retracing from that low. 10 a.m. is not retracing from that low. So I don't really care. But it gets hit and then we're displaced. Depending on how you feel about trading, sure, you can participate. I'd be done here. Likely. I like being done between 7:20 and 10 a.m. I just like it, okay? There you go. No more explanation needed for that. Take off all of these getting crowded. New day. 7:20. High. Range low. Open price. Reject, reject, reject. Sneaky little bugger right inside there. You saw it, you saw it. If you didn't, too bad. Out of curiosity. Just add a one down there for now. So, open price. No close below. Stay bullish. Close below. Bearish. Retracement goes down. This is Asia session or whatever. 20 points. So 38, roughly 20 points. From 38 to 10, roughly 30 points. Then it pulls back. Relatively equal highs. It goes down. Retraces again. Still inside here. More shorts. We go up. It's 7:20. There. You're looking for shorts. You are going to be short because the dealing range is holding. Okay? The dealing range is holding. We're in the premium. I want to short right there. Right there. So let's say we short. I think I did short this amount, as a matter of fact. Let's say we short. We get out. For whatever reason. Then the market rallies. This does not make you bullish. Shouldn't. This high has been broken. I think a daily high was broken as well. But I was not factoring a daily high in my assumptions or my calculations. So I won't sneak it in there. No. If you want, you could add a daily high here and then say, oh, confluence, beautiful. Not me. Short pumps up, or that equities open. Equities open spikes are usually almost never the direction of the market. Almost, I'm not saying never, almost never. If you have a spike in equities open, it's usually a grab on liquidity and then it's gone again. So yeah. This is not a 1 minute chart, so I won't show, intricacies here. Just focus on the important stuff. We run up, we close below. This is the expansion. This open price is my line in the sand. It's overlapping with that old high. Shorts from there. Shorts, more shorts. Valhalla. And that's how the cookie crumbles. Again, I'd be playing this until 10 a.m. 10 a.m. it crashes. So I did not get a whole lot of this because of my own rules. 10 a.m. it crashes. Amen. I'm done. 2 p.m. is somewhere in here, and then there we go. So, as far as review goes, all of this are stuff that you've seen or heard before. In August, you may not have seen me specifically say 6 p.m. But if you ever rewatch any of those calls, you will notice I did not need to point to 6 p.m. because the range high and low between 6 p.m. and 7:20 was always already encapsulated. And in the days when it wasn't, I would always say, I will just use this high and I will draw and you will see. So nothing here is new. Amen. I'll take some questions now. This is my revenge trading.
I got a question, Kish.
Sure.
In the KFC model and some of the videos you've used when talking about, and you're talking about expansion, expansion, failed expansion. You mentioned one time in one of your videos, I can't remember which one it was, that when you get to your key level, the expansion has failed. If the candle that failed the expansion did not CSD, the last expansion candle, you would use the second candle after the expansion failed. What is the logic behind that?
That is data. That is more data than anything else. And I'll tell you why. So key level is something I've been hunting for many, many moons now. And when you're hunting a key level, remember you're looking for a level that you believe exists, but you don't know where it is. So hunting key levels is not I know where the level is. It's I'm looking for something that I know exists, but I don't know where it is. So you have to create rules and filters to find it, or tell yourself or show yourself when you're close to something. I've always loved expansions. I've always liked to see when expansions fail and reversals happen. I've always loved to see when expansions fails, reversals happening, and they're happening right from the order block. So the last expansion right here is this candle. This is the last expansion candle. This did not close below here. So I know this is my order block. Full stop. Not every time, because of the size of the candles, we get big 2 down candles, 1 green candle, fractals. Sometimes it takes quite some time to get back above that, depending on the time or the time frame you're looking at. So unless you're going to say, I'm only going to trade absolute A+ when this gets 1 big up candle. So days when there's thinner volumes, you just don't trade. If you're doing that, it's fine. But if you're like me and you always want to trade every single day, unless there's a clear reason for me to not trade, like Monday, there's a clear reason for me to not trade Monday, but chances are I might still scalp. About 15% chance, to be honest, because with that big drop down, I'm not really interested. But chances are if I show up and my rules are there and I see a scalp and I can be done before 10 a.m., I'm gonna take it. That's just me. When you go looking for stuff that are repeating every single day and you don't see your A+ and you see something else repeats, so you know that this is where you want to see the CSD to go long, but A+ is not there, you start seeing multiple candles inside here, multiple candles inside there, and then it still goes higher. You start looking at what's happening in there. So that's what I did. I paid attention to all the expansions that failed, all the expansions that reverse after failing with 1 big candle, all the expansions that failed after failing with multiple candles. And then that's how I saw rules to play with.
Okay, thank you.
Yeah. So I don't think you hear this enough unless you see me trading every day and you see the human aspect coming out. I am just a product of my rules. Everything you see here is a rule or rule set that I use to protect myself. I protect myself when I'm right and I protect myself when I'm wrong. No more than ever. No more than ever. I want to protect myself when I'm right and protect myself when I'm wrong. So yeah, I playing around with something that looks like this. This is essentially, I think how do I get it off? I can, 1 second. That big box can come off if I go here. Yes, there we go. There we go. So everything we just talked about can be summarized or stuffed into this indicator. All it has is the range created between 720, open price 720 to 10, which is ideally where I want to participate. And if I'm looking for reversals after that, inside here, and be done by 2 p.m. There it is. Simple, simple, simple. So a whole lot of rules and rule sets that keep me grounded, keep me not trying to do stupid stuff, keep me not doing anything outside of what I'm supposed to do. And it opens my eyes to stuff. I mean, it's very, very simple. Look at it. So simple. Wherever I want to trade, usually running one side of this. If it's not running, it's reacting off a level inside there. There we go. Simple, 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 simple. So that's the short. This is what, Monday? This is the first trade that we saw on Monday. There we go. This is the other trade that we saw afterwards. Shorts inside here after CSD. There we go. So I would have been done early or have a run-up depending on mood. Same thing. Range, EQ, discount. There we go. And then react, new low, retrace, 720, break, short, done. And then of course yesterday, liquidity run, CSD, enter, bam. So yeah. What did that one be? Where's Monday? Monday was a push up. What am I looking at? I'm lost. Oh, I was looking. So that was Monday. Just going through. That's right. Just going through previous days. Same thing. Range. Purple box is where I want to trade. Set up in the purple box. Not bad. Range. There we go. Reversals at 10. Not bad. Range. Blah, 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 blah. Range, blah, 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 blah. See? This is how silly and stupid I get. And this is why sometimes I might seem stubborn, because I'm not trying to think too much outside of following what these rules say. That's it. That's it. There we go. There we go. See? Nothing special, nothing magical. Amen. 2 persons in the chat. Is this indicator available to the public? It can be. It can be.
Hello, Kish.
I know that voice. Oh, you might.
How you doing, Kish?
I'm good.
How's the family?
They're good. They're good. Just chilling today. Is Saturday.
Oh, lovely. I can hear you. Is that not your daughter's voice in the background?
Ah.
Lovely. Nice.
This
It
is
was
where you
nice.
take over. This is where you take over the review and then enlighten the guys.
No. No. I could never. I just thank you for sharing, and for the ones you're not speaking out loud about but showing. Thank you for those. God bless you. One quick question based on the notes. Actually, I have maybe like 3, but if we go back to the daily.
Which one, the daily?
Yes, I the picture you were showing, I observed something and I wanted to ask if it makes sense. So if I annotate, because in the first image you said, I think this was the end of a week. Just trying to use this. Okay, maybe this would be better. You showed a picture with the weekly profile, like the
with the boxes.
Yeah, the boxes.
Let me. There we go.
Okay, amazing. And I wanted to ask, because this is what I saw initially. Does these lines that I'm going to draw, do they make sense?
Mm-hmm.
This, and this, and this, and this. So in this instance, would that mean this and this? Or not?
I can see them.
Mm-hmm.
I know what you're pointing to. I just don't know what the question is.
Yeah, but does that make sense to say it that way for retracement?
Yeah.
Okay.
There really wasn't any question in there, to be honest.
Okay.
Because I'm sure you already knew that.
Just wanted to confirm there's
I don't mind bouncing ideas, but remember,
yeah.
ICT made the markets, not me.
Mhm. We're TCM guys first, so you make the market. You have the Lambos.
Nah.
So if we go back to the chat, and the second question would be, when you were talking about the, I don't know if you could just go over again now in the chat when you were talking about if we close below. So can we look at it from the perspective of an expansion? So if I have an expansion and you are talking about the fact that if we close above from the highs, then you want to buy. If we close above from the lows, if we close below from the lows, then you want to sell. Is it possible to apply that to an expansion too?
As in above the expansion range, high or low?
Yes.
So I generally look at the expansion high and low for liquidity grabs. Me personally, I don't look at it from perspective for continuation or not. I'll tell you why. I'm good at a lot of things, but I know the things in my own trading that I struggle with. Mostly mental, but I still know what they are. For the longest while, I've told myself that it is enough. There's no perfect trader. There's no perfection. Just handle my demons and I'll be fine. But September was not nice to me in terms of a lot of days when I wanted or unexpected clear shorts. The market just kept rallying. So I set out on a quest right now, and I'm currently experimenting or forward testing data that is meant to bridge the gap of what I cannot see. The things I cannot see, I'm working on ways to make up for that. With that being said, expansions and the way I look at it offers me information about direction and key level, but I use it for liquidity. So understand what I'm saying? When the market is expanding lower, I can see that it's bearish. I understand that it's bearish. But instead of automatically looking at a bearish expansion and think I'm going to go short, I look at the expansion and I say, this is a key level. If this level is being respected or rejected from above or below, this is what it means. If this level is retraced to and we don't get above it, this is what it means. Those levels almost never include the range high in bearish markets. In a bearish market, and I see an expansion, I usually assume the market is too heavy to get back to the range high, unless the expansion started before 720 and 720 starts pushing towards the high. While I will not assume the high is going to get taken, I will say, if the high is taken, then this means lower prices. So if you've ever watched me lose any trade, I guarantee about 85% of the trades that you've seen me lose are when the markets break a high and don't come back and don't CSD on the time frame I'm watching, but I incorporate lower time frames so as to not miss the move and end up taking a loss. That's a fact that I know from my own reflection. So because I know that that's where I mess up, instead of looking at more information around the areas where I lose, I simply take it out of my trading altogether. Okay? So expansion range highs don't improve my edge or does not solve the problem of me failing in one-sided markets. And for that reason, I just leave it out of my process. I really can't be bothered trying to force something in an environment where I know, like history says, I take losses in one-sided markets. I have a whole lot of theories about how to trade one-sided markets. And for the most part, they're very good. But when I sit down and the market is one-sided, something about getting in at the extreme still appeals to me. It was literally yesterday, I sat down and I was saying to myself, I don't know if you guys ever listened to like Jesse Livermore when he talked about how he lost after following a cotton expert, and he pretty much said that the 2 times you shouldn't trade are when right after a big win. Right after a big win, you shouldn't trade. And I interpret that as if I know where I am likely to lose on breakouts, one-sided market that don't print the breakout fractals I know. If I know I'm likely to lose there, try to see everything that invalidates that idea so I don't get caught in it. And that sounds even more confusing. But if we break a high and we CSD, that's not a continuation. So I can get away with trading like that. If we break a high and we don't close above, then that's not continuation. I can get away with short in there. If we break a high and we close above, then the time frame I'm watching usually plays the biggest part in whether I'm successful in a short or not. So those things are not technical analysis. It's more of the rules I use to protect myself in environments where I know I don't have the best advantage and I still want to trade. Because if I know it's breaking out and I don't want to trade, I just leave it alone. But if it's breaking out early, like before 10 a.m., and I want to participate, then those are the things I try to use. So while I understand the question about the expansion and expansion high and looking for breaks above them, it's borderline the same things that makes me lose. So I just stay away from them altogether. I just look at them for hit and run. Grab the high, CSD, go. If you grab the high, no CSD, then I'm like, okay. But yeah, big part of consistency is knowing how to lose and where you lose. And I have a very good idea of where I lose. So if you're ever following advice from me for we're talking about trade setups and you see one-sided days, clearly one-sided, before 10 a.m., it carries a great degree that I may be wrong, especially if it's not doing obvious things like an obvious CSD. So if you push above a high and there's no obvious CSD and I scale time frames looking for something, whether I get away with that or not, if you miss it, be fine, because that's where I usually take losses. And I know that. If you haven't seen that yet, then you're not actively analyzing. But yeah, nice and simple. No fluff, no fluff. I wonder what Bitcoin is doing today. Oh, don't mind me looking at Bitcoin. It's just pure curiosity. It's not anything significant.
Thank you, Kish. I think one more question that I would ask would be, because it's also based on what me and the other guys have been looking at, would be, and thank you so much. That last part was really helpful, because I know we've had the conversation in the past about optimization, and sometimes it's just better to optimize on what is working than optimize what is not working, right? It's like,
yeah, can't fix them all.
Yeah, yeah, that's true. Okay, but what about this idea or this concept, because this is the time we're speaking and I want to use it, about what do you think about the fact that I believe that expansions should connect. If markets should be efficient, then expansions to connect. If expansions are not connecting, and that is a gap.
Well, I've never thought about expansions connecting, especially in the same direction. I mean, overlapping expansion, like an expansion low and expansion higher, I can see that, and efficiency is clearly there. And I believe in efficiency. But expansions connecting, something about that sounds very interesting. Like imagine if we expand higher, then it's just not clear expansion, and it expands again. The space between that is expanding, or we could even consider it as thin volume. Not bad.
Yeah.
Not bad. I like the idea. You've done work on it?
Oh yes.
Yeah, it
We've been
sounds
exploring
intriguing.
for a few weeks now, and it's very interesting.
Sounds intriguing. I'm playing around with something along the lines of something like that, but I'm trying to get a different perspective. I'm trying to use volume with price levels and tie it into ranges. So what was the volume like inside a particular range at different prices? And I'm doing that in hopes of identifying where the largest submitted orders are. So where the largest buy orders and largest sell orders. And then I see bias, or I'm trying to see bias. So far, it's pretty decent. It's decent, I must be honest. But it's so much out of my comfort zone that adapting it into my process is taking some time. But I like the results. I like the results. But let's see. It's only 1 month. Any strategy can be good in 1 month. So I'm giving it time.
That is amazing. Well, you have some guys in your group that are interested to. They can not quant, but they can run stuff for data.
Really?
They
There's
can
something
run.
I'm actually working on now that may or may not be public. Let me show you. Where is it? Going all out today. Kidding.
Let me grab the popcorn.
No. It's not popcorn worthy. It's the thing I sent in the group yesterday. This has so many moving parts to it. I am just crashing out. So let me get the link from over here. And then let me see if it loads over here. So as a quote unquote mentor, sometimes I don't know what to talk to you guys about, simply because I don't know what you don't understand. So generally I'll have conversations about the things that you talk about, or the questions you ask me, or the chart you send me. But I know when people go quiet, it's usually because they are not doing so well. But in my private community, I feel like we're now close enough where if I have a loss, I don't have to hide it. If they have a loss, they don't have to hide it. So I'm playing around with a website that allows me and my guys to journal our trades, watch videos, and then see a leaderboard structure where whatever all your trades can be, you can input all your trades and you have your own little dashboard. I think this is, I'm not signed into this. What's the, I don't remember.
www.
I think this is what I did. I really don't remember. See, I don't remember. Fine. Here's what I'll do. I'll do something better then. Since this is not behaving, and I really don't remember what the password is. I'm gonna do this instead. I already have a tab open, and there. Okay, I can't get back in. I'm sorry. I don't know what the password is. It's not letting me in. I don't know what the password is, but anyway, it's basically going to be a website for us. Wait a minute. I think I just saw it. No, it's not. No, it's not. So why I said that was if you know how to navigate this kind of madness and you're in the group, then we have some things to do. I need a creative outlet. I just feel like I'm not doing enough. So I need a creative outlet. And it was either one of two things. Go back to trading live every day. Well, three things. These are my three ideas. And then we'll wrap up this call here. Because I feel like I was lacking a creative outlet. And this is a part of my grand design to self-improvement. One thing that makes you move and sweat every day. One thing that gives you an opportunity to read. One thing that earns you money. One thing that, a whole lot of list of stuff. I'm just trying to be well-rounded. And I decided I wanted to have one thing that I can use as a creative outlet every single day. Something that just allows me to push the boundaries of my understanding. Option number one was go back to trading live with you guys. So then I'd be forced to be in top form every single day and trade every single day, blah, 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 blah. Number two was to do a strategy tester YouTube thing. So every day you would suggest, or I'd ask you to suggest a strategy to me, and the strategy with the most likes, I would spend some time investigating it and then telling you my opinion of it, just for fun. Yeah, I wouldn't put any kind of reels, like no more than a lot, one lot or two lot behind any trades on that strategy. I just kind of play around. And then number three would have been this: create a website where I get to see everybody's performance and then focus on the persons who trade particular strategies and are failing. So just improve the understanding of the whatever strategy has the lowest win rate. Improve the understanding of that strategy, and then hopefully everybody gets up to speed. But yeah, I'm using this thing called whatever this is. I just came across it on TikTok. It's relatively inexpensive, and I'm just telling it what to do, and then look at the preview, and then if it says, if anything is off, I try to add it. So if you're one of the few persons who have access to this, if you can see anything on it and it does not look ideal, just suggest them to me. I'll tell it to the bot, and then they will improve it, and then we'll go until we have a website where there's a whole lot of feedback loops for everybody. And then hopefully, if it gets to the point where the feedback loops become effective, I plan to implement an AI feature that you can ask questions instead of ask me and it answers. But it's a big dream, big goal, all that stuff. I just started yesterday. I don't know how far it's going to get, but if you're here and you want to see it successful, your assistance is greatly appreciated. And for joining this call, you get to see that these are the sessions that I'm going to actively be showing how to trade. Like fully showing how to trade between You're trading anytime before 7:20, what to look for. If you're trading anytime between 7:20 and 10 to noon to 2 p.m. Those are going to be the, allow me this once, TCM trading sessions to pay attention to. You pick one and then apply a strategy within that window of time, and then etc. Blah 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 blah. Yeah, there we go.
So how can we help? Like, how do we contribute to this?
So for now, it's just me getting the idea out and then making the small tweaks. Once I feel like the tweaks are enough to share with the public Discord, then you'll get in. If you have ideas, if you're in the public Discord and you're seeing what I'm saying now, if you can make a list of stuff that should be there, it will be greatly appreciated. If you suggest anything that should be there and it gets added, then I give you access. So that way you get rewarded for contributing. That's fair. That's fair.
Yeah. So when you say stuff that should be added, are you talking about, from what we can see right now on the screen, anything in regards to process that we think should be there?
Yeah. So the first, so I'll that's what I wanted to show you what it was like, so you can see what I mean. But again, this has been like 2 or 3 days using it, and I really don't know what to do here. I click wake agent to see if that's going to wake it up, and then let's see what happens afterwards. What is this? Refresh. I don't want to push refresh and the AI starts over again. And all right, this part is up. So this part should be visual any moment now. Okay, so this is what the website currently looks like. This is join the community, gives you access to create an account. The trading journal part and the stats that should be displayed are what I'm currently working on. This part, the videos are going to be easy. I am going to hopefully incorporate the WAP videos and any Patreon lessons into here, so that everything just can be here. You can find all the videos in one place and they're labeled and all that good stuff. Working on it. That part is not going to be done anytime soon. Community and leaderboards. I know people get itchy around P&L in terms of dollar amount because lot size will vary. So I have, the last command I gave it was to create a filter. Yeah, see, leaderboard should have 2 filters. You're able to display the best percentage gain or loss and the best pip count or point count. I'll change that when I get some time to do that again, because dollar amounts will have people, going into shells. Oh, you made 100%, but it's only $200. So, and then somebody's making $200 per day. I don't want that kind of vibe. So I'm going to make the option to hide the dollar amount visible, and you can show your percentage, because that way everybody knows once you're following the strategy and managing your risk accordingly, then the percentage is what should matter, not the dollar amount. The first issue we came across was that once you input a journal entry here, it didn't allow you to edit, and it wasn't calculating the P&L properly. So that is something I am currently working on to get the P&L part to show properly, because it would just calculate the differences between price, and it would show a sell as a loss because it would be negative. So it's a whole lot of intricacies I'm trying to do. Give me some time, and then it should be good. But yeah, after, like, outside of these basic stuff, I know there are a lot of other stuff that we can implement, not just video lessons, but like PowerPoints, and then hopefully a newsletter and all that. So instead of updating Patreon, and because I don't know how to upload documents on WAP, I don't get to update WAP. The plan is, once I move this into a newsletter type structure or an additional newsletter type structure, Sunday nights I can send out updates, and then depending on depending on life, I'll either do a daily update or every couple of days or weekly or whatever. I don't know. But I just want to find something trading related to keep me going and keep my brain active. So yeah, I'm gonna find a way to have it display the top trade and for the day and for the month in terms of P&L and percentage and all that good stuff. And then these are generic reviews. I have no idea who these persons are. Right? These are generic reviews that the AI put there. I don't know what else to put. So that's what I'm saying. If you know anything else that would make this useful, you get to put your P&L, you put your trades, you get to the asking questions on the AI part is going to come later when I get rid of the visual stuff. And then once you get your access, this is going to be where we are. Discussion forum is going to be there as well. But yeah. Just one-stop shop for everything TCM related, or one stop for everything TCM related, and then that's just it.
Okay, makes sense. Yeah.
So again, if you have anything that you think would be good to add there, feel free to send it to me. Yeah, I'm not going to do anything today. Today's Saturday. I'm gonna rest, catch up on my anime. Tomorrow in the afternoon, I'll very likely be tinkering around here. So yeah, if you are good at these computer stuff, you can DM me. I can give you early access and we can work together. If payment is what you want, we can talk about payment. But whatever, it's a lot, and AI is helping me, but two brains are better than one. So yeah, I don't want to make the call too long. And I don't know if I should post this call since it's got so many non-trading related stuff. But anyway, we will talk about that. So with that being said, thank you guys for coming out. Will you still use Discord? Absolutely. You can still find me on Discord. You can still find me on Telegram. You can still find me if we've ever played iMessage games. If you've ever seen me on WhatsApp, you can find me everywhere. Twitter, you won't find me on Twitter. I don't see any upside to being there. Anywhere else you want to find me, already. And yeah. So if you want to have a conversation outside of trading, you can DM me. If you want to have a trading conversation, you could ask a question. You could even DM me the question if you're shy. The communication channels stay open. It's just that it's becoming burdensome to manage content everywhere, by myself. So yeah, this is going to stop all of that. If we're in a private group, that group will not change. Talking in that group will not change. Yeah, but the bulk of communications is going to be where it's easiest. I'm getting old. I'm not complaining. Old age is a blessing. I'm just saying. I'm not taking more work. And
working
again,
smarter, not harder, man.
Yeah, which is why I'm slowly moving to the point where the paywall drops, specifically because I don't know. I feel comfortable when we just chill. Especially for the guys who've been with me for such a long time. I feel like we're friends. Patreon, I don't consider Patreon as a paywall. That's I think every creator has a not gonna say a fan page, but all that. And if you know me, you know that everything I make from services does not go into my pocket. It goes into community projects, which
buying Crocs.
Well, that's true. Well, I can afford my own Crocs. What I'm saying, if you know me or we've spoken about this before, I do a whole lot of community projects. You will not see any pictures or photos for clout. You will not hear me talking about it like ever again. Just know that contribution is contributed elsewhere. It's not contributed to me or anything like that. But yeah, that's why I'm offline a lot. I'm offline a lot because making trading your life eats away at a whole lot of you, and you don't realize it until it starts impacting how you communicate. Like places you used to go no longer feel fun. People used to enjoy talking to no longer feel fun. Every time somebody asks you a question about your day, you run away talking about trading. That's what that was happening to me, and I don't think it was healthy. So I started a community project to just get me involved in other people's
other
life,
stuff.
which are not trading related. There are folks who want to trade though, but yeah, non-trading stuff. Like community outreach.
It's called normal life.
Yeah, that's what it is. Normal life. I'm back to normal life as much as I can. But yeah. Yeah. That's it. It's 11:09. I should go break my fast now and have some fun.
So, if it's not for ask Kish, can we, like, if you can crop out the ending part, if we could get, because I was a bit busy earlier on during the call, and there's some stuff I wanted to review later on. It might be a big ask, but if it's possible, please.
I mean, if not, I can just post the call. I'll just post the call then.
You can just post it. You can just post it in the Discord group instead of YouTube. So it's not.
No, Discord has a thing against posting large videos like this. Yeah. But yeah, no worries. Rest assured, you will get the video. If it's not the full one, it's the edited one, but you will get the video.
Appreciate it. Thank you.
All right, guys. It's Saturday. Enjoy your weekend. If you're reviewing, finish up.
Please.
And I don't know if you review and put in PowerPoint, but I review and put them in PowerPoint. That's easier for me. But yeah, toodles. See you in the group.
Thanks.
Respect, big man.
Lots of love and appreciation, guys.
Thank you.
Bless, Kish.
Bless.